One of the dignitaries sitting next to me asked me, "You change a lot. You look very young." I says, "This is the changing face of the world." So, what a joy. What a joy and pleasure to meet all of you. It's an extraordinary feel for me and my wife. It's our home. We have an excellent experience. I was just telling Mr. Abri, universally, everyone will acknowledge the fact this is the most beautiful country. And wherever you go, whichever be the part of the world, when you talk about Omanis, they're the best people in the world. Simple, humble, humility is the trait. That culture is enduring its values. People are so nice. That's the expression even a stranger who have experienced once or twice Oman will say. So it's very nostalgic for me to integrate this evening, all of you. And it's my pleasure and privilege to be integral part of this interesting and exciting evening. We live in a changing world. The world is changing as we speak. Tonight, we should be getting a decision about US Fed interest rate hike. Even after 6 years of financial crisis, we haven't resolved the issue in substance. The world is changing on account of globalization. The world is changing on account of re-regulation. What was once called deregulation has become re-regulation now. Technology and consumerism has been resetting the global governance. When we realized Lehman Brothers as well as Bear Stearns was in trouble, we thought it's a liquidity issue. Liquidity crisis became a funding crisis. Funding crisis became a solvency crisis. It has become a sovereign issue as well. The world has not achieved sustainability in terms of global growth and substance. That's the reality. What has changed is simply liquidity, which is inflating artificially the financial markets. By printing money, improving the liquidity, the hard money was transcending borders. And asset price deflation has become asset price inflation. Essentially, the world at large has not achieved universal standard in terms of accounting, valuation, securitization, and ensuring that we create a better world by eradicating extreme poverty, by bringing gender equality, by recognizing universal health care, by measuring and managing and controlling universal education, by setting standards for environment sustainability, rising sea levels, increasing temperature, animal extinction. Global warming and climate change is an extraordinary challenge the world at large is coming to terms. To achieve all these Millennium Development Goals, we need to come to global partnership, rebuild this partnership in ensuring we have committed and responsible policy making and execution to see this world is becoming its dues and enduring its value for sustainable for generations to come. That's the mission we all have. If you look at the bigger picture, when I say the global issues are enormous and sustainability is not being accomplished, IMF has released the report in July. Every year we have twice dissemination of data takes place. One is in October, another one is spring meeting in April. April number was revised in June, thereafter in July. If you look at the bigger picture, global growth is less than 3%. Last year, by this time, the projection was between 3.3 to 3.8%. We are seeing the reflection in the financial market. Emerging markets are slowing down. Advanced economies are grossly underperforming. We have reflection of United States recovering but it's not sustainable in real order. Cumulative conditions which were imposed in recognition of the fact that in order to increase the interest rate, which I just mentioned that is likely to happen today, one is housing market is supposed to be recovering, true and fair. Purchasing power parity is improving. Jobless claims are reducing. But the growth is uneven. Inflation is not there. How do you inflate the global economies in parlance to sustain incremental growth? That's the bigger challenge. With the deflection of commodity markets, the oil price costing less than 50, it's a bigger challenge for them to recognize to be or not to be. Whether we should increase the interest rate or not, it's very subjective. If you look at the growth, last quarter was 3.7%. Prior to that was 0.6%. It's extraordinary for me to see such an ascending trend, but highly volatile trend can happen. How can you increase the interest rate? That's my personal opinion. How can you increase the interest rate unilaterally when the rest of the world is still engaged in quantitative easing? If you look at the euro, as a design, it's a deformity. By birth, it's an issue. In large euro, the monetary policy is centralized. Fiscal policy is not centralized. Improving the money supply, they are trying to inflate. Still, Greece is a telling story. The gross to GDP, countries who have lived beyond their means have to pay a heavy price. Fiscal prudence is not there. Fiscal consolidation is not there. That's precisely the reason, as good as last week, European Central Bank has said they're going to continue the bond buying programs. 60 billion a month. Trillions of dollars have been put into open market operations by Americans, multi-trillion. Same logic holds good for inflating Europe. Europe is said to be growing between 0.8 to 1%. But if you look at the bigger picture, contagion impact between Spain and Portugal and Italy, it remains to be seen the sustainability in terms of economy is coming or not. Bank of England is a telling story. They are still inflating. They were contemplating options as good as last week, whether to hike the interest rate. They put on hold the decisions. The UK economy is moving between 2 to 2.4%. When it comes to emerging markets, they were the incremental growth for global productivity. The economic engine of the world is emerging markets. But the situation is precarious. China is slowing down. That's precisely the reason a couple of weeks before they were doing devaluations. Competitive devaluation is measurable. In order to improve the exports, they had to engage in devaluing their currency to project more export volumes. Understandable. If you look at Brazil, it's in contraction, 1.5%. If you look at Russia, on account of Crimea annexation, the geopolitical makeup, extraordinary set of contractions, over 3.5%. Especially after the Chinese devaluations, the world at large has seen huge currency depreciation. World over, the financial markets are highly unpredictable. Financial markets are nothing but gambling ground now. That's the reality. If you look at Gulf economics, in July, the projected gross domestic product, taking oil at 60, is 1.438 trillion. The current account surplus is over 40 billion, nearly 3%, 2.8% of the GDP will be the current account surplus. That's the projection. In real terms, the Brent is quoting today at 49. US crude, New Mexico is quoting $46. You can calculate, you can put the arithmetics in perspective. You can realize Gulf economies are going to run in fiscal deficit. Certain economies will still run in current account deficit as well. That's the reality. If that's the case, there's one country which is getting its arithmetic right. That's nothing but India. Extraordinary mandate in terms of political standing. And the market liberalization measures which they brought in is unique, but still to be resolved. It is not going to be sustaining its credit of 7.5% or 8%, while in econometric terms, by simple arithmetics, this country can do core econometric terms not less than 8 to 9%, provided politics and economics converge in real order. We have seen the distractions between the politicians. Of course, they have taken initiatives which are responsive. We have market liberalizations. Measures have been taken in terms of defense, in terms of insurance, in terms of banking off late. You have seen payment banks have come, microfinance has been switched on now. India is grossly underbanked, undercapitalized as well. There are reasons to believe why we should liberalize further. Real estate, healthcare. The policymakers have attempted to bring in investment climate which is improving. That's commendable. But still, structural reorganization required in terms of GST. Still, we have to sort out the minimum alternate tax, which is cleared in substance, but execution is compounded and complicated. Too many controls with less welfare. If you look at the global trade, it decelerated world over in the last 2 years. Global investments, if you look at it, and again, 1.26 trillion, that's the number. The biggest recipient is China, $111 billion. The second biggest is again China in the name of Hong Kong, $118 billion. Together, they have achieved $229 billion. Then comes Singapore, $81 billion, a small country, purely because of integrating the investment climate in line with the globalizations. It's easy to do business. It's competitive, offering in real terms. Brazil has procured $62 billion. India has just procured $43 billion. It's definitely better than the previous regime. Between 2013 to 14, it was just $28 billion. India is in the right direction. There's no question about it. But the challenge remains of convergence of politics and economics in real order. Go again to Asia and Southeast Asia, West Asia. If you look at Japan, if America can print money, Bank of England can print money, United Kingdom can print money, definitely Japan has to print money. Trillions of dollars were put into open market operations. That's precisely the reason Abenomics was reset. That has improved. That has improved Japan from the pulling out from the recession. We have seen Japanese economy is slowly but steadily inflating. But again, if you look at the growth momentum, it's less than 1%, 0.8%. Aggregate terms, if you sum it up, the advanced economies as well as developing economies, there is no substance in real order to sustain the global growth, not even 3%. What does it mean to you? It means a lot to you. It means recognition of the fact that global economics has to be stable for your business to be stable and functional. The extraordinary turbulence in the global economics is impacting the financial market. I just mentioned the financial markets are gambling grounds. Truly reflecting the fact, you look at any currency today. You print money, improving the liquidity, as I mentioned, and depreciating currency by real order. Currency is supposed to be barometer of the economy. If you start artificially administering the currency, you are interfering in terms of the set-in universal mechanism. That's precisely the global powers are doing today. That has got enduring disturbance in terms of overall economic fundamentals. The prediction, dissemination, and the The measurement mechanism are getting distorted in real order. Currency war has been created to create trade war. China has got more compulsion to sustain. Chinese economy has grown over 9% for 30 years. Housing market is a bubble. Shadow banking, trillions of dollars are in distress. Extraordinary set of circumstances, even their domestic growth is put to considerable roadblocks. Again, policy making is unique. Administering currency has been the trend set. But if America can print money, there's nothing wrong about manipulating currency. That's the real order. It's not economics, it's politics in substance for us to recognize world at large is setting extraordinary disturbance in terms of global governance. In terms of financial markets, it's not only currency. Look at the commodity markets. When oil price is deflecting at a current level, people think it is only demand and supply. No. Currency is equally responsible for oil price deflection. Yes, there is an excess supply. The hydraulic fracturing, that is natural gas or oil out of the fracturing process is not energy efficient or environment friendly, but it is giving enormous advantage for the United States. That is going to stimulate more supply, and America will be self-fulfilling their needs in terms of the overall energy security. They don't need to import oil anymore. America commands 20% of the world import, 12% of the world exports. In tandem, if you look at the energy supply chain which they have reorganized, it's going to empower them back in track in terms of economics. Understandable. But reality remains, supply has moved just from 89 millions of barrels to 92. That's it. It's not excessive. If you look at the currency deflection, this dollar index was 79 basis points as a basket of currency the year before. Today, as we speak, it is 95 basis points. I see many of the chart accountants here. If you look at the value proposition, if the currency market is weak, what do you do? If the dollar is weak, you hedge the currency by buying commodity futures. Oil futures were responsible when oil was quoting $143. It's not the spot deals alone. When the dollar is strengthening, it's the other way around. It's a free fall. Over 30 to 35% of the current deflection in the oil price is on account of the currency getting strengthened, dollar getting strengthened. It's petrodollars. That's what I'm trying to articulate. That's the reality. With the Iran-West deals, we have a bigger momentum going in terms of supply, in terms of oil or gas. You will have further deflection in terms of oil or natural gas. That we need to articulate. We need to extrapolate in real order. These are changing dynamics which we need to understand for you to set up your own business model. Today, Gopa was asking, how do you run your business model? My answer is, we have to reignite the business model time and again to sustain credibility. Your business model is changing, whether you run a bank, whether you run a manufacturing industry or a trading house. You have to understand we live in a globalized world. It's one world, interconnected, interdependent world. The policy decisions which happens in one part of the world, whether monetary or fiscal, it has got direct impact in your operation as well. That's true. That's how you need to articulate solutions when you have to redefine your business model. The current deflection in many of the business which you are seeing is nothing but global deflation. The reflection you are seeing is reflation and recession constantly hitting the world. Reflation if you look at it, advanced economies, whether it is Europe or US or Japan, is going through reflation. When it comes to recession, there are certain parts of the world which are contraction in real order. That's purely on account of the negative growth. So if you sum it up in real order, you have combination of reflection as well as reflation as well as recession in real order for us to recognize. So it is not the oil prices going down, the Gulf economies are going through extraordinary turbulence. The world at large is not stable and functional. You have to look at it in interconnectivity terms. That's why it's important what Fed is going to decide today in America in the next 1 hour's time is equally important for us. What is likely to happen tomorrow in the financial markets. As bankers, we have to look at it. As investors, you have to look at it. As a businessman, you have to look at it. What happens if the interest rate goes up? It's due in another 1 hour's time. The announcement of interest rate is there or not. Nothing indicates to me, as I mentioned, that you have to increase the interest rate. But for the heck of it, if there is a promulgation, if there is a consensus to inflate American economy, interest rate is going to go up, theoretically. If I assume that options, what it means to you in terms of financial service. You have to look at what do I do in terms of stock market. Which part of the global equities I will keep it long and why. Leave alone whether hydraulic fracturing, American shale gas is going to have sustainable acceptance by the public utilities, whether it's energy efficient or environment friendly. We don't know. But the reality remains, if you are not making 200 billion investments, it's going to degenerate your production 18 million barrels a day. It's a question of time. Let there be opening of Iran. Doesn't matter. So medium terms, essentially aggregating all the factors, not only demand and supply. The currency market strengthening, what you're seeing in US is not to your US advantage in real order. They can't hold export mechanism in real order at 95 basis points as a dollar basket. It's not possible. So medium term, my prediction, again, in pure professional substance, I see not less than $60 for US crude, $65 to $70 for a Brent. It may or may not touch $100. But long term, we need still, emerging markets needs energy security. Alternates are being explored. Solar, wind, biofarm, biofuels. There are reasons to believe that these alternates are still, the scale and substance is not commercially. This zone itself is arid zone, 365 days sunshine. But they cannot generate commercial viability in real order, in total terms. Carbon neutral societies are evolving. Alternates are being contemplated. Renewables are coming up. But still, oil and gas will have its way forward. Medium terms, you will have sustainable growth. And these economies will come back in track with investable surplus, not only current account surplus, but fiscal surplus. So looking at the current context, what you're seeing as a deflection is only a short-term phenomenon. And within the 6 states, for reasons which we believe, there's a huge opportunity to collaborate between 3 countries. One is India, which I mentioned, is an extraordinary country with heritage, civilization, culture, said to be in the right direction. India has withstood every bit of instability in the world. 1997 financial crisis, it withstood. 2000, when Americans sanctioned, we withstood. On account of nuclear physics, there was an imposition of sanctions. We withstood. 2001, post-September, we had no difficulty. 2008, when the financial crisis was visibly shaking the world, we withstood. Financial stability, liquidity or profitability was not an issue. And again, we are in the right directions. The demographic dividends and the consumerism which the market compound and offer is extraordinary for us to believe. That's one country you have to watch. And again, in terms of Qatar as a substance, a country of great vision and execution, whether it's political progression, social progression, or economic progression, is a huge convergence in real order. That's an opportunity. A country of great benevolence, a country which we all love, is Oman again. If you look at the three countries, if they can come together, that's what we discussed today. How do we distinctly sustain our value systems? Is only by, not by reinventing, by collaboration. Whether banking or trade or investments, you need to come to terms by recognizing, building this partnership in real order. As on date, if you look at the bilateral partnership between, let me start with Qatar and Oman, it's 3.1 billion. The Minister for Dukum Development is here. Qatar is a partner in the whole frame. The G2G chemistry between Qatar and Oman is extraordinary, whether it is civil service or administration. And the opportunities for Omanis to do business in Qatar, my good friend Kiran Ashari is here as well. There are enough Omani businessmen, either small or medium, or big enterprise, now scaling up their operations. It's one business, one market. You can look at the market integration in substance. We are here to facilitate through Bank Masjid and Doha Bank collaborations. In substance, you have a growing relationship which has moved from $1.8 billion a couple of years before to $3.1 billion. And again, this is going to grow. And a bilateral opportunity between Oman and India, again, is a bigger order. Today, Oman is a telling story in terms of tourism. That's going to be prosperous. And so our zone is developing. And we have seen the reflection of India and Oman coming together, India and the Gulf coming together. It's over $150 billion relationship in bilateral terms. Bilateral investment has not taken place. That we agree. But the trade between these two blocks is $150 billion. The investments is mushrooming now. As long as India is giving a clear signal for investment protection, this is going to grow. Last month, the Prime Minister of India was in Emirates, UAE. Over $70 billion was secured project commitments UAE rulers have admitted, agreed. That's going to grow. Whether it is Qatar investment, whether it is, again, Kuwait investments, whether it is Saudi, whether it is UAE, the sovereign funds is going to be channelized to better advantage for bilateral partnership. Investment partnership is mushrooming. That's going to grow. On account of proximity, on account of human capital, we see a better relationship between the Gulf. And naturally, the logical fit between Oman and India is extraordinary for me to believe. That's extension in real order, whether it's trade or investment, banking and finance. And that's where we have a role to play. And Doha Bank, in its wisdom, to recognize its footprints as a global enterprise, has moved from local to regional, regional to global. We see the potential opportunities. It's a partnership which we can come together and offer you solutions as individual or institutions. Whether in India or Qatar, whether Qataris or Omanis, we can come together and make the most out of it by recognizing the potential, by understanding the tripartite opportunities we have. And that's precisely the reason why we thought it's appropriate to sum it up our thoughts, why we believe this is a logical fit, and these two institutions have come together to build this partnership. I was an integral part of Bank Muscat. I'm privileged to be a banker who has grown out of this soil. And I simply recognize this partnership is going to grow. And these two blocks between Arab world, Gulf and India is going to be stronger than ever. We have pragmatic leadership style as well as substance. We are here to endure as professional institutions to enlarge your vision and execution. Thank you, ladies and gentlemen, for your kind attention.